Okay. Well, we had a name change.
We did.
As you can see on the top, it's the Adbacks. Simply because we saw somebody else that had that name.
Yeah, we just
I don't
didn't-
think they were even using it. I didn't see any updated.
They hadn't done any videos for a while, and they were in a
Right.
different industry, but just didn't
Yeah.
want any confusion. And we
This
talk
is
about
easy.
Adbacks.
Yeah, we talk about Adbacks a lot.
Mm-hmm.
We talked about Adbacks in the last episode, and that's going to lead us into today, which we ended as a topic of discussion on the last one, due diligence.
Yep.
Right? By far, the biggest pain in the butt.
Yeah, it takes
When
the
selling
most
a
time.
business,
It's
yeah.
the most stressful. It's like you said last time. It's where we have to manage everybody's emotions.
Yeah, I mean, it's the one thing sellers that are not familiar with selling a business, it's like it comes out of nowhere when you get into due diligence for those types of sellers. And I say it like that because it feels like they get slapped in the face because they weren't expecting to have somebody crawl through every ounce of that business that they have. And they're going to be asked things, and for reports or for documents they may never have done
Correct.
sometimes. And it's stressful.
It can be very
Right.
stressful.
I've actually had sellers that wanted to not sell a business because of due diligence being so tenuous, I guess you'd say.
Mm-hmm.
You know, and sometimes it drags on too long, right? Sometimes a buyer will drag it along.
Correct. And that's why, for instance, you want someone like us with you, because deal fatigue is a real thing.
Oh my
And a
God.
lot of people get deal fatigue sometimes in due diligence, because it seems like due diligence can just drag on and on and on. And
I hate it.
they ask, like you said, you know, you get together a group of documents and then they want to see this document in addition and that document in addition. And the bank asks for this, and they think it's just never ending. And yeah, they get frustrated.
Yeah, the other great thing about when you hire us, though, is we already know what most buyers, depending on the type of buyer, what their list is, because we already have like template lists ready. So like I know if it's private equity, I already have a list I know they're probably going to ask. So you can already prep that seller. Hey, listen, this is what they're going to ask for. Before I even get their list, they're most likely asking for these things, give or take a couple other documents,
Yep.
right? What I think a lot of sellers don't understand is sometimes you're going to provide documents that are going to disclose something, right? Nothing bad, but they'll disclose something in that document where a buyer will look at it and go, hey, that right there, I need more info on that. And I think that's kind of where sometimes you, as a seller, you can get a little annoyed because now you have to go dig.
And we prep sellers as much as we possibly can.
Oh,
I mean,
100%.
for instance, when I take on a seller, the first thing they get is a packet where it gives them the list of things I need to be able to go to market and list the business. The very next one they get is a due diligence list of things that I know we're going to need during due diligence. Now, some of those things we can't put on there because the bank may request something that we haven't done before.
Yes.
Or we haven't seen before.
Yep.
And other things are just timing related. You know, they really can't be pulled until we're at that point. For instance, there's some tax forms and things like that you really don't pull ahead of time.
Yeah.
You wait until
Yeah.
the time is appropriate during due diligence to pull those tax records.
Yeah, I mean, it's something that I, like you, prep. And my first interview, once somebody signs on with a listing, you know, I have another interview with them on the phone, and I tell them, okay, the steps from here on out are X, right? And I go through it, and then I get to the section where it comes, okay, should a buyer come along, make an offer, whether that's an LOI or a contract offer, they're going to have a due diligence list, right?
Yep.
And then I immediately talk about due diligence right then and there. I try to get it out of the way, that first interview post, listing agreement, because they need to know it might not happen right now. It might be a month, 2 months, 3 months from now when that offer comes in and you get signed, then you're going to get that. But the biggest pain in the butt, Mr. Smith, of your selling a business is going to be your due diligence. The for you, the easiest part is getting it listed, talking to the buyers, negotiating with the buyers, getting whatever they need to make an offer. Why? Because you don't do any of that.
Correct.
Right? I mean, most everything is what I'm doing. I might have to ask you for something, send you a question or something like that. But for the most part, once we take that listing agreement, they don't really need to jump in ever until we find a buyer that's ready for a phone call, ready to put an offer in, whatever that case may be. Right?
Yeah.
So, I get it out of the way quick and up front just because I would rather tell them now than to hit them, hey, got an offer in, you sign this is what's going to happen.
Yeah.
Right? I'd rather just say, hey, due diligence sucks.
Yeah, I get them prepared. I tell them due diligence is like, a lot of times I tell them it's like getting health insurance. They're going to go through everything. They're going to want to see everything. So if you've ever bought life insurance, a big life insurance policy, they get blood tests. They have you go to the doctor. They ask you about this. There's a huge questionnaire you got to fill out about things you've had, things you haven't had, so on and so forth. Due diligence is the same way. I tell them this is the period where a buyer gets to basically do a full exam of the business and they can request any type of information they need to make sure that everything we've told them is correct.
Yep. They're going to look in your closet. They're going to look under your hood. They're going to look at everything they can.
Yep.
Right. And the reason why is one, to validate and justify what they're doing, but also to find anything that hasn't been disclosed. And I always tell sellers, this is when, if you have skeletons in your closet, they will be found.
Yep.
And if you hide those skeletons, you can get in major trouble once you close on the deal.
Correct.
Because reps and warranties will come back to you. You can be sued. You can lose that money you just got at closing.
Yep.
All of it, some of it, whatever, and you just don't want to. One, it makes us look bad, which I've never had that issue.
No, I've never had that either.
But it's just one of those things that they need to know up front. As a seller, you need to know up front. And I think we're talking more to the mom and pop style businesses, right? The guys that have the business, if you have a business that's doing $20 million a year in sales and all those things, you have an idea, right? Because you're being contacted by private equity firms. You might have entertained one or two. I still say, even if you're doing 20 million in sales or 50 or 100 million in sales, having a broker helps, because
Absolutely.
a lot of the pain in the ass things that even the mom and pops go through in due diligence, we still help with, even at that size, right? And we're just basically helping you get down the river.
Correct. And what you want to concentrate on is running your $20 million business, not gathering documents and making sure they get to the right person. And did this get over? That whole process, you don't want to be doing that while you're trying to run your business.
Yeah. So, let's just go down the list of kind of what the process is like, right? So I think the first thing that's always asked for is financials.
Yes,
right?
all full financials,
Full
so
financial
all your
history.
P&Ls, your income statements, your balance sheets, all your typical ones.
And get more detailed when it comes to financials is, yes, they want tax returns,
Yes.
right? They're also going to want your income statements for those same years. It's not like they want just one or the other. They want both, right? And typically, whether you have $1 million valued business or a $100 million valued business, they want your income statements to be monthly. So you're going to put that in Excel.
Yes.
And you're going to have each month of each of those corresponding years in there, so they can see that detail of month by month each year, what's happening with, revenue, what's happening with expenses, operating costs, things like that. They want to be able to see the ebb and flow of the business as well. So it's not just, oh, here's tax returns, or here's the income statement for that last year. I don't have my tax return yet. It's like, great, cool. Okay, you might not have the tax return, but they still want that monthly, right?
Yes.
And another thing that I think a lot of sellers don't realize is, and it's definitely something that you've got to show when you get into the bigger market businesses, but also in the smaller markets, it is going to be bank statements.
Oh, yeah. They're going to ask for 12 to 18 months of bank statements, and they're going to start reckoning those bank statements against your internal finance or your internal accounting.
A quality of earnings uses bank statements. They're going to have to correlate where the money's going in, where the money's going out, make sure that there's nothing missing, comparing it to the income statements. Because they don't compare it to a tax return.
No.
They're looking at income statements, and they're looking at those, and that's how they reconcile where money comes in and out. So it's very important to that. Second segment, what's normally number 2 on somebody's list?
After your financials, they usually want to look at, if, for instance, I've had businesses that they've had really good
It's all
SOPs in
different.
place.
Lists are all different.
And they've got a binder that's a 3-inch binder, and it's got every process for that business. They'll want to see things like that. They want to know what the processes
How do you
are in the
work
business.
the business? Yeah.
Correct. When, for instance, if it's a service business, when a lead comes in, how do you handle the lead? Who handles the lead? What's the next step after they're done with that? When's the first interaction with the client? Those types of things. Yeah, they want to know how the business works.
A lot of and we'll be on. I'll be honest with you. From my side, in my experience, I don't see a lot of businesses that have SOPs in place. They might have like one or two, but it won't be an all-encompassing for each department. It'll be like, accounting, right, and managers, and that's it. That's the only SOP you see. And there's some businesses just don't have SOP, and that's fine.
Correct, and a lot of your Main Street businesses are not going to,
and that's fine.
But
they'll still be asked.
Still be asked. And food for thought, if you get those in place, it's going to benefit your business. Not only will it benefit your business while you're running it, it's going to benefit your business when you sell it.
Yeah.
Because a business that has SOPs in place is going to sell for a higher multiple than one that doesn't.
Yep, correct. Yeah, so SOPs do matter. If you don't have it and you still want to sell, doesn't kill you, doesn't really hurt you that bad. As long as you have a way of explaining how things are done, and as a buyer, I can go in and spend a day and watch and say, okay, you told me this is how things go. That's exactly how they're going. I can forgive not having the SOP and still give you that SOP multiple. Yeah. But you got to have some kind of way of validating, whether it's spoken to somebody on this is what we do, this is what happens when it comes here, and it gets to here, right? SOPs are very important, but not the catch-all. And then you're going to get the other things. The one thing insurances, right?
Yeah,
They're going
all
to
your
want
policies,
every insurance policy.
Yep, your auto policies, your GLs, your workman's comp, any of your policies that you pay for, they're going to want. Yep. They're also going to want to see your lease if you've got a lease.
Correct.
They're going to want to know the terms of the lease because, for instance, if you're doing an SBA loan, SBA is going to require a 10-year lease to match the loan.
Correct.
So that's going to have to be worked out as well during due diligence, and that's normally when that happens as well. That's when the buyer a lot of times gets introduced to the landlord.
Yep.
Or the landlord first becomes aware that the business is being sold.
Yep.
And then you have to work out a lease with the landlord.
Yep.
Sometimes that's easy, sometimes not so easy.
Sometimes it's easy, sometimes it's shit.
And especially down in our area because
Florida's bad.
Well,
sometimes.
And a lot of it, I think, honestly, is our area too, because a lot of the businesses that I work in Collier County, there's no written lease. It's a handshake agreement between the owner and the landlord, and there's nothing written down.
Yeah.
And getting some of those landlords, when a buyer comes along, to just put something simply on paper is like pulling teeth.
Yeah, it's a pain in the butt. But leases they can be, easy, hard, they can still get done. It's not the end of the world. The one thing I will tell you when it comes to a lot of the SBA banks that I've dealt with, when you heard Greg say you're going to need a 10-year lease, that is 100% a requirement to get an SBA loan.
Now, how you get to that 10-year lease,
how you get there doesn't really matter for a lot of banks. So, and let's go with like the easiest lease that you can do would be a year-to-year through 10 years.
Correct.
Most banks will take that.
Yeah, as
Most
long as
banks
it equals
will just say,
10 years.
We will agree to a 10-year lease. You will pay year to year. That's good enough for most banks. They're not saying that you have to have a dead-end spot, 10-year lease, and this is how it's going to entail over the next 10 years. No, you can just say, hey, here's a 10-year commitment, and it's going to be, you pay year by year, no commitment, probably do that. It can literally be like you could terminate the lease anytime you wanted, but there's a 10-year, there's some kind of verbiage in there that just says 10 years.
They just want,
and the bank's okay with it.
Yeah, the bank just wants to see that you have the ability to stay in the same place for the next 10 years while you've got the loan.
And there are a lot of banks that will accept assumptions. You can assume a lease too. Mm-hmm. So you can't assume the lease. So
but
it has to be in there.
Right? Yeah, and you can assume that lease, but if there's 4 or 5 years left on that lease assumption, you have to have an extension that gets you to that 10 years.
Yeah. Yeah, so you can't assume a lease. It has to be already within the current lease that it is assumable. And if that's the case, how many years do you have left? Like Greg said, if there's 5, you still need to get the 10. The great thing about the assumption side, though, is a lot of times, and obviously you're going to have your pain in the butt landlord, but a lot of times the landlords are more willing to let that happen because they know the place is going to be fine. Yeah. It's not going anywhere. It's not going to become vacant. So, if you've had a business there for 20 years, right, and the landlord's good, and they don't want you going because you're a staple for them and that's guaranteed income, you're not going to have too many issues. There's 5 years left, great, just need to get to the additional 5. And a lot of times what you can do, and the banks will say yes to this, is okay, we will assume the remaining 5 years, and you just have a letter from the landlord saying that there is an additional 5 years option. And 9 times out of 10, a bank's like, that's fine. We just need it in writing. We just need him to sign off on that.
Yes.
Him or her, right? So leases aren't too much of a hassle unless you have the prick landlord.
Yeah, unless you just
Right.
run into a landlord.
Yeah.
It's
Most
not really
landlords
that
seem
bad.
to be okay. There'll be a little, some will be pushy at the very beginning, but then they'll realize kind of what's going on, and they'll be like, oh, yeah, whatever you need.
Yeah.
Like they end up falling and caving and going, okay, fine. I do want this.
Well, and it works out-
It's guaranteed income.
exactly.
You don't wanna
And
lose
it
that.
works out better for them
Yes.
to have someone completely transition versus having them exit and they have to go out and find someone else
Correct.
to rent it.
Yeah. So now you're sitting with vacant. I mean, look at commercial properties, right?
Correct.
What is it? New York City. Where are they saying? I mean, this was 2 years ago because I haven't been paying too much attention. But like, what was it? Some of those high-rise commercial buildings in New York City, they're 40% full. Like
Yeah.
they only have 40%.
Yeah.
There's 60% left, and they can't fill it. Like they're losing money, right? So would you rather? Hey, you're staying.
Great.
Perfect. Here's that lease. Let me have you resign. And yeah, 5 more years. Okay, fine. Yeah, there's 5 more years guaranteed.
Yeah.
And then banks are cool with it. So,
Due diligence, you're most likely also going to schedule some type of site visit.
Correct.
If that hasn't been done already, they're going to want to come down, see the facility. They
surveys. They'll want surveys. Whether
Surveys.
they're leasing or buying, they always want surveys.
Yep.
Because they kind of want an understanding of the property, boundaries and things like that. Most of the time when you're purchasing the property, that's when the surveys are really coming into play. But a lot of them, even with leases, will still want to see surveys because they'll just want to know kind of where their out of bounds is.
And going off of the tax theme, most of the time they'll want to see sales tax receipts.
Correct. Those are easy.
And those are easy.
Easy.
There's also another form that is universally filled out. I cannot remember the name of the form off the top of my head. I believe it's an 8879, but I'm not sure. But it's basically a tax form where
Yes.
you fill it out, send it into the IRS, and they say, yes, you have submitted tax returns for these years.
Yep.
So
Yeah,
to make sure
they
that
wanna
the tax
validate
returns that
that
they're showing,
you're-
they've actually been
Correct.
filed, they've actually been taken care of.
They want to make sure there's, as a buyer, I want to make sure there's no repercussions from the IRS if I buy this business,
Correct.
whether I'm assuming your entity in a stock purchase or I'm doing an asset purchase where I use my own entity and assume the goodwill and the assets and inventory of a business. They still want to make sure that the business is not breaking the law. Really.
Correct. Or it doesn't have a tax lien
No
on
tax
it.
liens, yeah. So there's that. I mean, due diligence lists are not as easy as we're making it seem because it's, especially when you get into the higher, you get outside of middle market or you stay in middle market, they're a little bit more extravagant,
Yes.
right? If you're selling a $500,000 business, $1 million business, it's pretty simple.
The books are usually pretty
simple.
Pretty simple. It's not, detailed accounting.
Yeah, it's not super detailed accounting, but it's very important that you understand what's going to be expected.
Yes.
And if you talk to a broker and they say, I don't know exactly what a buyer's going to want in due diligence, find another broker.
Yeah.
Because we've done this long enough. It doesn't matter if you're private equity, private buyer, family trust, whatever you are, we already know what you're going to ask, right? 95% of what you ask, we probably already have a list.
Yeah.
Right. There's going to be 5% where you are going to ask for something that we might not see. But a lot of times, depending on the business we're looking at and we're selling, we'll see something and we'll go, okay, so that's going to be an area of concern that's not on a typical due diligence list. I'm going to need details on that.
Yeah. And also with those due diligence lists, they can be very unsophisticated or they can be very sophisticated. I've gotten due diligence lists that are very short, and it usually comes from buyers that aren't quite as sophisticated.
Yep.
The longer lists usually come from a buyer who's more sophisticated. And then also, like you talked about, it also depends on the sophistication of the business.
Yep.
If it's a small business, like you said, a $500,000 selling price maybe has like 150 in SDE. There aren't many employees. There's not a whole lot of things to go through. It's a very simple business.
Correct. Yeah, it's very simple.
One that has 40 employees and all over the place, that's a much more complicated business. You've got to dig in more.
Yeah, and especially now, due diligence. Let's talk about the employee thing, right? If you're a slim operation, you don't have very many employees, it's going to be a lot smaller when it comes to the employee section. But if you have a good amount of employees, they're going to want payroll reports, right, for each individual year, for each individual employee. Which those are easy. QuickBooks puts it all in a list format for you. if you use QuickBooks, which most businesses do.
Most nowadays
businesses
do. I've still run into a couple that are
Remember, I've ran into a few that
napkins.
were literally using legal pad and just writing out their stuff.
I talked to one gentleman. He kept his accounting on a calendar, and he just wrote in
amazing.
how much money he took in that day and how much money he spent that day, and that was about it.
Yeah, and then I had a plumbing business here locally. I sold for like $3.5 million, and he wasn't a sophisticated seller because he was a guy that turned wrenches, but he was a hard worker, and he was probably one of the best sellers I've ever dealt with. And he literally had a P&L and balance sheet for every day over the last 15 years. Like he had a filing cabinet. He had a wall of filing cabinets and said, you name a day, I can go into one of these cabinets and pull my income statement and my balance sheet for that particular day. And I'm like, are you kidding me? And it was the cleanest books I'd ever seen in the plumbing. Most time, plumbing businesses have a little mess.
Yes.
This guy's financials, you'd have thought it was run by a Fortune 500 CPA firm. Like, it was ridiculous. And it was one of the easier sales I've had. I wouldn't say it was easy, but it went faster than expected.
And that kind of goes back to what we've discussed in the past too. Your books can make a business sale really easy or really difficult.
I have one right now.
Yeah.
I was telling you, I have a pool business that does more than just pools. Does all the outdoor that you would need: pools, jacuzzis, AstroTurf, golf greens. They do outdoor kitchens, and the grills. They do everything. They sell golf carts. It does all these things, and unfortunately, to get the SDE that we're showing, it's not like all ad back, but there's a decent amount of ad backs, and the problem is and when I'm experiencing, it's not like it's the first time I'm experiencing this. What you will experience is buyers pushback.
Yep.
Because they're going to say, I have to add all this back to get the cash flow to that number. Okay, where's my proof? Right? So if you, part of due diligence will
Which
be...
is legitimate.
Legitimate question.
Yeah.
You can't go against it. You can't argue it against it. So you got to fess up and give up the information if you're doing it. And as a broker, we verify before we put anything of value on a business. Say, hey, can you prove it? Well, no, it's just kind of sitting. Okay, well, then I'm not adding it.
Correct.
Just can't count that, right?
Yeah, got to have your receipts.
But, hey, I have a business right now. The guy puts everything in his income statement, even personal expenses. He just line items it. And I'm like, that's perfect.
Yep.
Because buyers will see it and go, I don't have to argue.
Yep.
It's there. They might say, hey, I want some receipts just to make sure that that's there, but not a big deal.
No.
But what are we running into right now is that whole, I have to add back. You've got, $200,000 in net profit, but the business is doing $600,000. Okay, what is it? Okay, well, they did this last year. He pays for these vehicles. He's bought vehicles for the family. And that's great. And this goes back to our previous episode. That's great. And it's not an issue, but you have to understand as a seller and a broker, if you're a broker listening to this, when you're in due diligence, you got to prove it.
Yep.
Like, you have to prove it. So if you're going to do the add back game, great. You're fine. But don't add back anything stupid, and don't add anything back that is not justifiable. Even if you think there's a little hair on it, don't add it back.
Correct.
Because a buyer's team, and I say buyer's team because a lot of buyers nowadays have a team.
Yes.
It might be Joe Smith, but he's got Don Johnson doing his CPA due diligence. He's got his financial auditor or whatever it is doing it. That guy's going to tear it apart. So the more bulletproof you can make that, the easier it will be for everybody.
Yeah. The more arguments you can take away, the smoother it'll go.
Yeah.
And it's
a constant game. But
yes, it is.
I deal with that more, and I'm not poo-pooing on this. I'm just saying you will see it more with businesses under $4 million.
Yeah. And this also goes back to...
Because those are people running their business.
It goes back to reasons we tell you why you want to hire a broker, why you want to have a broker with you.
Yep.
Part of our job also during this due diligence is helping to explain those financials and numbers to potential buyers and to buyers that we're under LOI with, so we can make sure that we get you to the close.
And the other part of this is, and this is kind of going outside of the due diligence part, but it kind of falls in line with it, is the more information that we learn as brokers, the less that you have to be bugged.
Correct.
Right? So what I do a lot of the times, I know you've done this in a different way, but you do it too. What I do is I have all the information I got, right? I go under contract, or I got buyers that are interested in all these great things, but I got enough information. I'm good. I know enough about this business. I could talk about the business, right? But something else comes up as a question and I don't have the answer. What I do is I typically will ask my seller, can you provide this, or what's the answer to this question? Great. And then I have a separate sheet outside of what people can see in my SIM or CBR, whatever we want to call it, and in my outside of the listing information on the websites and all that thing. And I have an FAQ. So anytime I get a question that wasn't already in the information I provide, I can put it in the FAQ, give the answer, and I tell my sellers all the time, I need this in writing. You can't tell me over the phone. I need you to just reply back to me in writing so I can copy paste this in. And now, as I catch questions that I didn't have the first time, that my FAQ sheet starts to fill.
Yep.
And then that's available and it's updated anytime I can inside the room. And then what that does is, one, and again, like you had said, you have a $20 million business, you have a $1 million business, you have to focus on running to keep it successful. You don't want to be pulled away every time somebody has a question. That's what helps as a broker. That's what we do to help keep these people from bugging you, asking 50 questions, because there's going to be a lot of times the same questions asked 20 times. Well, I already have the answer. So it's right here.
Yeah.
So that's another thing. That's a great thing about having the broker. And also for due diligence, that's where it helps.
And understanding there's two due diligences being done at the same time.
Yeah.
The buyer's doing their due diligence, so is the bank if you've got a bank involved.
Yes.
And I think part of the reason why people have gone to, like you said, hiring people to help them on the buy side go through their due diligence and things like that is because not everybody trusts the bank's due diligence to be in their best interest anymore. Because they're trying to make the loan. And yes, they want to make sure that it's a good loan for the bank, but majority of that money is backed up for the bank.
Yes.
They don't have to worry too much about losing all of their money on the loan that they give you for this business.
Yeah.
But you really do, because you're on the hook for that money. And that's why I think we've seen a rise in people having representation when it comes to due diligence.
Like CPA firms, right? I mean, it got to a point like you didn't see them 6-7 years ago.
No.
And now there is a lot of firms that are due diligence firms.
Yes.
That is all
That's all they do.
People hire them just to help them perform due diligence. You didn't see them as much 6-7 years ago.
No.
Now you're seeing them more because people don't trust the banks.
Yeah.
Right?
And I think there's a lot of industries like ours has been expanded because of things like Instagram and TikTok.
Yes.
And you have influencers like, there's a couple of them out there that talk about buying businesses. Cody Sanchez is one of them. Talks about buying businesses are a better investment than the stock market or this or that. And they're really getting people into investing into small businesses and buying small businesses instead of doing other things.
Yes.
But they saw a TikTok video and they don't know what they're doing. So they end up hiring those firms to make sure they don't make a mistake.
Yeah. Yeah. No, it's very important that you do, as a buyer, have a process of how you are going to look through everything for a business that you're under LOI with or under contract. Having a partner for due diligence is important, right?
Yep.
Unless you're a financial guy. Because I've talked to a lot of buyers recently that are former accountants or bookkeepers or CPAs or whatever, and they're like, I do my own due diligence. And it's like, okay, great.
Yeah.
You've done it, you're experienced with it, or you've been the financial guy for a previous firm for 20 years. You know how to look at things. Cool, right? There's those guys too. Great,
yes.
Right? I like dealing with those guys.
Yeah,
right. Because it's less emails. Because I'm not emailing 7 different people or 7 people on a chain of emails.
Oh yeah,
it's just one guy, and here's your information.
And I've had a couple recently. I mean, you've got the group that they hired, and then that group that they hires an outside firm to do the quality of earnings study. So now you're trying to communicate through 3 different people, and
and you're wasting
not
money.
as fun.
You're wasting money.
You are.
There's a lot of times you're wasting. And listen,
Yes.
I love the fact that people want to have that help. I'm all for it. But also do your research before you hire people, because
Correct.
there's some firms, it's like, and I'm not going to name names, but there's some due diligence firms that don't do Q of E.
Yeah.
Right? And it's like, what's the point? What's the point? Like, why did they hire you? Why'd you hire that person? Like,
Correct.
That's so stupid. Because now you got to I got to hire this other guy. So would you blow $30,000
Yeah.
between these two? I mean, these firms are expensive.
They're not cheap.
To buy a $5 million and higher business, a private buyer that hires a firm is spending at least 10 G's, and that's for a really
that's
shady,
and
not
that's-
very good.
And that's minimum.
That's minimum.
I've seen them. Most of them start
30.
between 5 and 10.
Yeah.
They can go up to 40 and 50, and that's just the engagement fee. A lot of them will also have a
Tack on,
fee
yeah.
at the end when you close. It's 5% of the business sale.
Yeah, and say no to that. Like, what's
That's-
the point?
yeah,
say no to that. Take a
You're-
flat fee.
Yeah, you should be anybody that you hire. It should be a flat fee up front. There should be no success fee.
No.
There really shouldn't.
I don't charge a success fee. I don't charge a marketing fee. You pay me this when we close.
Correct.
We're done.
Our fees are totally based on success. For instance, when
Yeah.
we take our sellers or our buyers for that matter, we don't get paid until their business is sold or we've helped them purchase the business they want.
Exactly.
But other than that, we're not getting paid for that.
I'm working for free until it closes.
Correct.
Basically.
Yes.
And we're spending money
Yes.
doing that. I'm
Yes.
spending thousands of dollars to get this business sold, knowing that if it doesn't, I just wasted thousands of dollars.
And not only the money, it's hundreds of hours too.
Hundreds of hours.
People don't understand that,
No.
there's a lot of work in this.
behind the curtain of what a business broker does.
Yes.
But back to due diligence, you've got all the legality things,
Yep. All your insurance.
insurances. When it comes to employees, you want your payroll reports. You want their insurances as well. That's part of the insurance packets too. But you also, they're going to want contracts that you have with employees, if there
Yes.
are any contracts. Healthcare, 401k, pensions. They want all of those. What are in those?
Sometimes during due diligence, they want to speak to a key employee. If
Yes.
you've got a key employee, they want to know that that person is good going forward, because they don't want to go to a close and all of a sudden that key employee finds out about the business and goes, "Well, I'm out of here."
Yeah.
Now they don't have anything.
If the person that you've trained to replace you doesn't stay,
Yeah.
no one's buying it.
No.
No one's going to buy it. Or they're going to buy it, but they're going to come down on value.
Correct.
They're gonna
And that's
say,
usually
he's
where
leaving.
Yeah, and that's usually where the buyer wants to lock up that key person.
Correct, yeah.
So they want them under an employment contract.
Yeah, I mean it's very important. The employee section of a due diligence has got to be an intensive one. It's one of the bigger ones sometimes because of all the things that people are asking for based off those employees. Sometimes they'll ask historical payroll, so they'll want to see how much they've increased in pay over the last couple of years to kind of see if you're giving them raises, what are their bonuses, how do you if you pay commission, what's the commission structure, right? They want to know what commission structures are for the salespeople.
And in Florida, I don't know about other states, but I know here in Florida a lot. Another big thing that they do during due diligence is they want to make sure that all your employees are here legally.
Yes, 100%.
Now, some industries, not so much, because
Landscaping.
Landscaping, hospitality, a lot of those things here in the state. It
is what it is.
It is what it is.
We won't talk about it.
But even Governor DeSantis talked about it here probably a year or two ago. Of we're not really worried about that.
Those are not the people we're worried about.
Correct.
Because they're the ones out there busting their butt in the sun all the time.
Correct.
Basically.
Correct.
They're working.
They understand that there's a certain part of the community that those types of services, they're essential to them.
Yes.
So,
Yeah, and they're
we're
essential
not-
to the economy of Florida. So
Correct.
I mean, unfortunately, politicians are always, if it's essential for the economy and it helps us, we're not going to rock the boat on that.
Correct.
We'll just keep it the way it is.
But I see that being asked more
Yes,
and more
it does.
and more.
It does get asked. Are they on payroll? Mm-hmm. That's the first question,
Yeah.
right? And I don't see it as much like in plumbing, your standard services, plumbing, HVAC, AC businesses, electrical, things like that. Not a big deal. Landscaping, almost always.
Yeah.
Are they all on payroll? I literally every buyer will go.
Mm-hmm.
Is every employee on payroll? Oh, yes or no. I always
Yes.
find that out. I hate asking that question,
But it's something
a
you
question
have
I
to
have to ask.
Yeah,
when
you
I
have
sign
to
a
ask
listing.
that.
Because it's like, okay, who's not on your payroll,
Correct.
right? And I've been blessed. The last couple landscape businesses I sold, everybody was on payroll.
Yeah.
So I was like, okay, cool. It makes it easy, right? But I've sold a couple where they weren't on payroll, and so
So
you
have
have to,
And most people that are looking in that industry,
they
already understand
They're
that.
not.
They already understand that.
Most people
They're not naive.
are looking in any industry know the intricacies within that industry, and they're going to understand why something's done a certain way. Oh yeah, I know that. Like restaurants, things like that. They're going to know why it works that way.
Yeah.
They're not going to argue with it. You will get some people that will try to, but it's the 9 times out of 10 that's not the guy that ends up giving you an offer.
No.
So just don't waste your time,
Correct.
right? what else? I mean, there is a decent amount. I know we're not covering all of it, and I think one reason why I'm not remember all of it right now is because I'm in the process of doing a couple deals that are like $1 million to $3.5 million. So the lists are typically a little smaller, but when you start hitting the 5 million plus, the list gets bigger.
Yeah, right? I'm in just about to exit due diligence on 2 businesses I have right now, and really the one has been very, very smooth. And the reason for that is my clients had their stuff together. They had it organized. We had already went through a pre-due diligence list. They had it all prepared before we even entered a due diligence with anybody. So the, couple little things that have been asked for beyond what we already had prepared, it was very easy for them. They were able to get it to them very quickly. And to be honest, we'll probably end up closing maybe a week or 2 early because we've been on top of the due diligence so quickly. Yeah. It hasn't been requesting something and it takes 3 or 4 days to get it back to.
That's where a broker comes in.
Yes.
Right? If you have a good broker, you can close sooner a lot of times. And it's simply just because we have already prepped you.
Yep.
We've taught you what you're going to need to do before you even need to do it.
Yeah, before you even get to that stage.
Yeah. So it's very important that the broker does matter. I'm not sitting here saying that we're doing this podcast to save our jobs. I'm not worried about that.
No.
I'm just saying there's some people that I've talked to are like, well, I don't need a broker to sell my business. Great.
You're going to wish you had.
You're going to wish you had when you're done with it, and 2, you're probably not going to get as much in value as you could have with a broker.
Yes,
that's
I think I may have mentioned this in the last podcast too. No matter what, contact a broker. If you don't think your business is worth anything, contact a broker. Yeah. Because I've had plenty of people that have contacted me, thought their business wasn't worth anything, they were going to shut it down. Let me look at their numbers, and no, you would have left $500,000, $1 million on the table.
200,000, whatever it is.
Whatever it is,
you would have got something.
You're leaving value on the table. Yeah. You're leaving money on the table.
Don't do that.
No.
Yeah, don't do that at all. So
if it can't be sold, we'll let you know it can't be sold.
Oh, I have no problem, right?
And there are things that basically say, hey, it's just not saleable.
There are businesses that are profitable that I turn away because I'm like, it's just not, it could be personality conflict. It could be, it's just not an industry I want to sell in, but even though that's a lie because I sell whatever comes my way.
There are a couple that I don't get involved in.
I shy away from, but I don't have a problem with it. And there's also just certain businesses that are too problematic and are hard to sell.
Correct.
Right?
If a business is too nichey, where it takes specialized knowledge and there's a handful of buyers out there, it's going to be a really tough sell.
It'll be a tough sell.
Another thing that makes it really tough to sell is if you're the owner and you are the business.
Man, there's a lot of those.
One suggestion I could make to anybody out there that's starting a business: do not put your name on it. Don't name it after yourself. It'll make it a whole lot harder to sell.
Yeah.
I've done it before. I've sold businesses that is basically the owner's name, but it was much more difficult.
Yeah. Yeah. I mean, use your initials.
Yeah, or
don't
something.
Use your name.
But don't just say, Bob Smith Incorporated.
Yeah, just
Bob Smith, whatever.
Just put an initial. Use your initials. Call it whatever. ABC Plumbing or whatever it is, right? And that's good enough, right?
Well, and just like
don't put Dupree Plumbing and your last name's Dupree.
Exactly.
Right? You're gonna be like shit.
But another thing to think about, which we were just discussing before we started this, was branding.
Yes.
Think about branding when you're doing your name as well.
Correct.
Because that makes a big difference in the saleability as well, or in a lot of things in the price of your business. If you've got really good branding, that adds to the value.
Oh, 100%, right? The best part is like when you have somebody sign an NDA and they call you and go, man, I know this business. I've seen their trucks everywhere. And it's like, that's good branding.
Correct.
That's a buyer I want to talk to because I know they understand and they're going to be like, no, I'll pay. Yeah. Like, I'll pay you for this because like that business is well known.
Yep.
Right. If you are comparing yourself to, I don't know, who's down here that everybody knows? Five-star plumbing and
Crowther
electrical.
Roofing.
Crowther
Everybody
Roofing,
knows Crowther Roofing.
Right? If you're doing what Crowther's doing, but you're not, your marketing sucks or your branding's not great, it's a harder sell.
Yep.
Right? Because you're not as well known. Now, I'm not saying that if you're not as well known as Crowther, because he's the biggest guy in the area, that you can't sell it. But what I'm saying is if it just doesn't look as good and you're at the bottom of a search engine's, in Google. It's not that you can't sell it, it's that the value of selling it's not going to be as much as the guy that can that's figured out his branding in such a way and his internet presence in such a way that he's up near the top.
Yeah, and we're not saying that that's going to add 3 points to your
No,
multiple.
not at all.
But a half a point to your
little
multiple?
tick. Yeah, it's a small tick.
On a certain business, that could be the difference in a couple $100,000.
Yeah, man, you'd be amazed at how many times like half a point will raise a business's value by $300,000.
Correct.
And people will be like, well, I don't want to pay for the half a point because that's $300,000. It's like, okay, I'll find somebody that will.
Yeah.
Somebody's going to pay.
Yeah, somebody else is going to see the value in it.
And it's amazing, like, and this is kind of getting off track, but like I am seeing more deals and buyers willing to do this. And I would too, because I look at it logically in that sense where you're buying a business. Most people buy a business, they're looking at a track record for the previous two to 3 years. But there's a lot of buyers out there right now that are looking at businesses or what are they doing right now? What have they got done right now? Because I'll pay off of that too, because they want the business. But those are only those businesses that are apex predators in their field. They're just climbing.
And those buyers are going to more than likely have their own financing.
Correct. And there's going to be structure. It's not like,
there's
hey,
going to be structure.
I'll give them $3 million for their business because I'll count 6 months of this year because I see how well they're doing. And that's part of the value that you're correlating everything together with. But there's going to be structure.
Yeah, there's going to be strength attached.
I will give you $3 million, but $2.5 is going to be cash, and I need the seller to carry a note for $500, or I want earnout or equity or whatever.
And in most of those situations, it's going to be an earnout.
Yeah,
when you're talking about those, they're
worth it.
just skyrocketing. Okay, as long as we get to those figures, I'll pay what you're asking.
Yeah. I think we got due diligence covered pretty good.
Yeah, I think so.
I think one thing that it's making me think about this because we just talked about the whole people buying off of what you're currently doing. The sellers, if you're a seller, please be open-minded.
Yes.
Please be open-minded because there's some sellers like, I won't do a seller note, right? And it's like, you're not going to sell your business.
Yeah.
You cannot be opposed to a seller note, right? And you might have a friend, a family member that sold their business, did a seller note, and never got paid on it. That's them. That's
Correct.
not you. It's not that their buyer's not coming to buy your business. It's a totally different scenario.
Correct.
And story. Be open to a seller's note. The SBA requires it for the most part in a lot of deals.
Basically
it's
without
gonna
saying
require
it, they require
They are
it.
going to require it for the most part. And that's going to be at least 5%. At least 5%, most likely 10%, but at least 5%. You're going to have to carry a note. The bank's going to want it. So if you have a buyer that's going to use an SBA loan, expect that they're going to ask you to float a note for 5 to 10 years, maybe more. It just depends on the structure and how to get things up. Don't be opposed to it. Now, the pain in the ass part of it is it's all what? Standby.
And that's when that's where you get into the individual banks.
Correct.
This bank and frankly also the rule changes we've talked about.
Yeah.
One bank may say, yes, that has to be on standby, but it has to be on standby for 5 years. Another bank may say, nope, it has to be on standby for the whole 10 years.
Yes.
Another bank may say, well, after the first 3 years, you can start making interest-only payments. It's bank to bank to bank.
Bank to bank to bank. So
But you're gonna see
figure
one.
it out. What I would tell you as a seller is expect standby. Just expect it.
Expect
and
it now.
If the bank comes back and says, you know what, after a year you can start getting interest-only payments, the rest of it's going to be on standby and balloon at the end, whatever, fine.
Yeah.
But just expect a 5 to 10 year standby.
In our environment right now, because that
Right
didn't
now.
used to
It'll
be the
change.
case. Yeah, because
Yeah.
that didn't used to
We
be the
used to
case
never
a
have to
couple
worry
years ago,
Yeah.
and it might not be the case 2 years from now.
Yeah.
But right now, yes, they want it on
It
standby
used to be
no matter
a 2
what.
year standby was kind of the standard, or 1 year standby was kind of the standard, and then a lot of the banks said, oh, you can make interest only payments ahead of time, so you could do that.
Yep.
Now, no. But you have to be open minded.
Yep.
Be open minded to not just seller notes, but be open minded to earnout structure.
And
yeah.
And also understand that how it's structured, just because it's on a standby for 5 years, doesn't mean you're going to have to wait 5 years to get that note.
They could refinance.
Exactly. 24 months of on-time payments with the SBA opens up to refinancing. And a lot of my contracts that I've done recently, that is put into the language.
After
that
24 months.
After 24 months, If everything has gone smoothly, the buyer will make all efforts to refinance
Yep.
the business and pay the seller's note off.
Yep. And we typically stick it in there. It's after 24 months and within 5 years.
Yep.
Like between 24, like if it's a 5-year standby, between 24 months and 5 years, they will look to.
And most buyers have
And
been
most
fine
buyers,
with that.
Yeah. And let's be honest. Wink, wink. You can sometimes get paid ahead of time.
The bank, unless you're doing something to draw the bank's attention to the business,
You could pay somebody.
they're not
not
going
gonna
to
look.
look through your books every month or every year and say, "Oh, who are you making a payment to here?"
There's
they're
a way
not.
to structure
Now,
it.
if you miss a payment or two, they're going to start saying,
Yes,
"Oh, by the way,
exactly.
we need financials from you every month."
Yeah. So if it's a good running business, great cash flow, there should be no issues
No.
going forward with it. 9 times out of 10, the seller we can work something out where the bank says this, behind closed doors we can get something else set up. It's not breaking the law.
No.
It's breaking the bank rule.
Yeah.
And it'd be amazing how many times I talk to a rep and the rep just says, as long as I don't know about it, we don't care.
Correct.
So, they play the game too.
Yes.
They play the game too, and they also understand that they have to follow their bank rules. They also have to follow the government's SBA guidelines.
Correct.
And as archaic as it's getting in some sense when it comes to the SBA, the reps are now starting to say a lot more than ever, hey, you could do this if you wanted to. Hey, between me and you, if you wanted to structure at the closing table, we get these, and then you guys sign this, so they can get something worked out, so the seller's not freaking out. There's potential for something like that,
Yes.
but expect worst case.
Yes.
Always expect the worst case, which worst case would be standby, right? And a seller note. Earn-out structures are great. They actually aren't too bad, especially if you're going to stay for an extended transition period, or you have AR on the books for the next 2 years.
Correct.
And it's contracted, it's coming in. You're going to get paid.
Yep.
And if the guy doesn't pay you, you can come after that person for that. That's kind of, earnouts are great. Equity is great in certain situations. But what I will tell you is, like any of these ways you do it, there's big advantages as a seller to these things. Capital gains, right? Your taxes are not going to be as high because now you're diverting everything. So there's a huge benefit, and it's residual income.
And you just brought up a point that we had forgotten. During due diligence, if you already haven't done it, that is the time to contact an attorney that can represent you at the close.
Yes.
That is also the time to contact, if you're the seller, someone who can help you with the large amount, well, depending on how big your sale is, but with the money that you're going to receive from the sale.
Correct. Yeah.
Because you don't want to have to give as much of that as you might have to the government. There are people that can help you out with that to make sure that you hold on to that as much as possible.
Yes. Good.
And we always
good
suggest those
CPA
two things.
firms,
You need a lawyer and you need a good,
accounting firm, CPA firm,
whatever
it is, tax.
you need an
Whatever.
investment advicer and you need an
Investment
attorney.
advisor, yeah, investment advisor will know exactly how much can be contributed and what you can get taxed or not taxed on. Have a good accountant that can go through that as well. It's super important to have a team
Yes.
when it comes to selling your business, because you've spent, and let's be honest, we talked about this in the last episode. Most people, when they decide to sell, weren't prepping the business for sale.
No.
Why? You just don't want to pay Uncle Sam, and I get it. We all understand it. So you're still going to have that mindset when you sell your business. So if you get a lump sum of money,
Yeah.
you need to figure out how you can not pay Uncle Sam as much the legal way.
Correct.
So having a team that can help you with that is very important. And we have contacts that we can always refer to. But, most people...
And I'm amazed at how
will
many
have some.
people don't speak to them.
It's
Like I
crazy.
have 2 or 3 finance guys that they can save you a tremendous amount of money in tax after the sale of your business. They just don't contact them. They go through, like you said, somebody else, or they just don't do anything about it, and they end up paying a 35-40% tax bill when they're done.
Yeah, when you could have paid 25,
Correct.
15, whatever it is, right?
Or nothing.
Or if you sold a property, you can do a 1031 exchange.
You can even do a 1031 exchange
On a
now with your
business.
business.
Yeah,
You can take
1031
that money that you got from the sale of your business and put it into an apartment building or something else that's cash generating.
Yep, it has to be a cash revenue, cash generating business, but property,
Yeah.
businesses, 1031 exchange.
Yep.
I mean, that's an easy way of doing
Yeah,
it.
and there's all kinds of other.
And there's advisors for that too.
Oh, absolutely.
There's firms, 1031 exchange firms.
Yeah,
Like, they
I
do that.
have.
We have one.
I have 3 guys that I use that have all kinds of, 1031 exchanges, opportunity zones. There's all types of
Yes.
things that you can park your money in where basically you don't pay any tax. That tax bill gets kicked down the road, and every so often, you take that money, you take out what you've made from, let's say, that vehicle, and you put it into the next vehicle.
Yeah.
It kicks the can down the road even more.
Yeah. Yeah. No. And listen, I mean, nobody wants to pay, Uncle Sam more than they should. And if you can keep kicking the can down the road and Uncle Sam just takes his little pennies, why would you?
Correct.
Why wouldn't you find the right people to help you with that? It's very important.
It's all about
Especially,
how much you keep.
It's about how much you keep. You're not gonna when you die, it doesn't come with you.
No.
But if I'm alive, I want as much of it as I can have.
Correct.
Right?
And a lot of people, they sell their businesses and they put part of it aside for their kids.
Correct. And there's things there.
Set up something for your
There's
kids
things
after
there.
your business sale.
Yeah.
Take care of you and then take care of your kids.
Yeah. I mean, hell, even parking it into an investment account or CDs or things like that. Yes, you'll end up having to pay taxes because you got a lump sum, but now you're making your interest, which kind of helps pull back some of the money that you paid. I mean, even that, as archaic as it is,
Yeah.
and it's going to take you 30 years to get a lot of that money back, but that right there is just a start, right?
Mm-hmm.
That's not having a team. That's doing it the old school way, like my grandmother writing a check in a checkbook and then balancing her checkbook. Like
Yep.
that's just an old school way of doing things. But you'd be amazed how people just don't know.
Correct.
They don't know that there's people out there. They don't know that they can do those things. And I'll say, hey, do you have an accountant? Do you have a financial advisor? Well, we have an accountant. Do you have a financial advisor?
Mm-hmm.
No, you need to get one. You're about to come into $1 million.
Yeah. I had a client of
You know.
mine who just literally had $1.5 million sitting in a savings account
Yeah.
because he didn't know what to do with it.
Yeah. Yeah.
And I was like,
then Uncle
really?
Sam's like, hey, do you owe me money for that? Type of thing. So that's very important. The other thing is when you get near the closing, especially with banks, but you got to do it anyway. I think it's imperative that you do it anyway. Is there is a form called an asset purchase allocation agreement.
Yes.
That is one of the most important forms that you can fill out. And it has to, both buyer and seller have to fill one out.
Mm-hmm.
They both have to sign it, and they have to match. So that is the form where you can actually, with a good accountant, move money around so you're not getting smacked with cap gains on your sale.
Correct, because your goodwill is going to be taxed differently than your assets.
Yes. And a broker's
the-
fee is not taxed.
Correct.
So pay us more, you don't have to pay as much in taxes.
Save in tax.
You save in taxes. That's how I look at it. No, it's a very important form. And that form literally just has line items of, okay, how much of this $1 million in purchase price was inventory? How much was goodwill? How much was assets? How much was this? How much was that? And you put you put an amount of money in each one of those buckets, and it totals $1 million, right? Now, as a buyer, you do have to take it on the chin because typically it's the seller that's going to want it a certain way. And I've never really had pushback from buyers. Usually if the seller's like, I want it to feel like the accountant said, I want to do it this way. Most of the time the buyer's like, that's fine.
Yeah.
Because the buyer's going to write off, they're going to have depreciation. They're going to have other things that they can do to not have to worry about.
And that's why your
that.
buyer's going to want as many as the assets to be valued as high as possible.
Correct.
And your seller's going to want the goodwill to be as valued as high as possible.
Yeah, correct. So you got to come to terms with that because both of those, it's two separate forms, identical forms. They have to look the same. You have to sign it. The buyer's got to sign theirs. It goes in when you submit your taxes for the next year. And if they match, perfect. If they don't match, audit. IRS triggers an audit, and you both get audited. So that is a pain in the ass. You don't want that. I haven't had that happen, but
No.
I've talked to Joe. I don't think Joe's had it happen, but Joe's witnessed what happens with that stuff.
Yeah.
You don't want an audit from the IRS
No.
because now they're going to be climbing down your throat trying to find every penny that they can get from you because they're going to find everything that you did and go, oh, well, you can't do that. Or, yeah, you can do that, but that doesn't, you've still got to pay us for it.
Yeah.
And things like that. So having a good accountant that can help you with that form is actually more important than I think people realize, honestly. And sometimes listen, and it could be one of those things that you don't have to have it signed at closing, but you do
Correct.
have to have it signed when you go to submit taxes. So at some point, buyer and seller got to talk. How are you going to get this filled out?
Yep.
I typically have it signed. I typically try to have it filled and ready at closing, the bank's going to want it that way. Now, here's the great thing about it: you can change it after the fact.
Yes.
That goes with the bank. That goes in the closing packet. It doesn't go to the IRS. So you and the buyer can meet again before those things have to go in, and you can adjust it. That's fine.
And by the way, the bank is not going to turn you into the IRS.
They don't do that. And the reason why they don't do that is because they lose money if they do that. So why would a bank want to lose money?
Because I'd have had people say,
I've had people say that.
Oh my God, is the IRS going to see this? And no, the IRS is not going to see any of these
The
things.
IRS doesn't come looking. Now, and if the bank's defaulting, maybe, but chances are, if your loan is in good standing, they don't give a shit.
No, they're
not going to care. No. So it's very important that, these things are in place. And it really, at the end of the day, it just comes down to having the right team.
Yep.
Having the right buyer team and the right seller team. And I've seen the wrong buyer team and the wrong seller team.
Yes.
That have killed deals.
And I've felt bad for some clients that have been on the other side, the buy side, being represented by the wrong person.
God, man.
And I felt bad for them. The things that they didn't know, the things they weren't told. Yeah.
I've dealt with a few other brokers. I'm not saying I'm the greatest broker. I would never say that. But I've met some duds.
But do your research.
Do your research.
Have some
please.
basic questions that every single decent broker should be able to answer and not go, No, they should have a clear, stated answer for you. Then take it from there.
There's two that come to mind.
Oh, yeah, I've got several that come to mind one's no longer in the business.
The one retired after he closed the deal with me, and I was like, God, you should have retired before you closed.
The one I know had his license taken, so
that's cool. Yeah, that's cool. The one bigger deal I closed because I represented the buyer. I think we did more work. Myself and the buyer did more work to get information than the broker of the seller did.
Oh yeah.
Like I was like, how am I the one that has to go get this? You represent him. Get the shit from him.
Oh, I've had the same thing.
And then
just
argued
flipped.
about it.
I've had the same thing just flipped where I've represented the seller and the buyer had a broker that was representing on the other side.
Too.
I've had to do most of the work on both sides.
I did that. That shoe store I sold.
Yeah.
I don't care about your age. I really don't. But this guy was 70 something. Yeah. Broker, been doing it for 30 years. I don't care that you've been doing it for 30 years. You fucking suck at your job. Because I dealt with that guy. One, he didn't, like the first buyer-seller meeting where the buyer comes in to the shoe store to see the place, to get the lay of the land, to talk to the seller. Buyer's broker didn't come. And then when the buyer walked in, the buyer says to me, "Oh, I didn't know you were going to be here." And I was like, "Oh, yeah, I have to be here. It's my listing."
Correct.
As a broker, I have to be present. And as a buyer's broker, he should be present. Well,
yeah, he's actually required to be present.
He didn't say he needed to be there. And I'm like, interesting.
Yeah.
And it was like, you got to be kidding me. And then she's asking questions, and I'm like looking at her, and I'm being nice. I'm not poo-pooing her because she doesn't know.
Correct.
And that's why you need your broker there, because she doesn't know. So she's
you don't
asking
know
questions.
what you don't know.
Yeah.
Either.
She's asking questions that the freaking broker that she has should be able to answer while we're there. So I'm answering buyer's questions that are more about the buyer, less about what the seller's doing. She's asking questions for her side, and I have to answer those things for her. And I'm like, I'm not your broker.
Yeah.
And I didn't say it like that. I didn't say that, but it was just more like, Jesus. And just kept going. And then the rest of that transaction, it was like, then he wanted to argue with me about how he's getting paid. And, well, I want this. And I said, you're not getting that. And he, blah, blah. We went back and forth. And finally, I went into the bylaws that we have as brokers and said, you didn't show up for the buyer-seller meeting.
You're entitled to nothing
which
by the
now
bylaws.
means you're entitled to nothing. I don't have to actually split anything with you.
Correct.
Since you missed that meeting. That's part of our rules. And it's not just so you can we don't have that rule so you make sure you can get your money. We have that rule so you don't leave a buyer or your seller stranded.
Yeah, and not
she
only
felt
that,
stranded.
It makes sure that you conduct yourself professionally.
Correct.
A professional is gonna. If you have a meeting, you show up because you're a professional.
And mind you, I knew kind of what I was getting into because this guy showed up in a Tommy Bahama shirt and shorts and sandals every time he had a meeting.
Yeah.
Right. And I'm not saying that I'm not dressing in a suit. I refuse to wear a suit.
Correct.
But I'm business casual.
Yes.
Collared shirt,
We understand we're in South Florida. Everybody dresses like they're on vacation,
Oh.
but that doesn't mean you need to come in flip-flops and shorts.
But everything, every time, it was like Hawaiian shirts.
Yep.
I'm like,
I probably know who you're talking about, too.
yeah. Name starts
The
with
Hawaiian
J.
shirts.
He worked at, is it not CBB? ABB. He worked at ABB.
Mm-hmm.
He retired after that deal. Yeah, that was fun. But yeah, that is 100% hiring the wrong broker.
Yeah.
And it was a $600,000 deal.
Mhm.
And he screwed it up.
Yeah.
He screwed it up. Like the buyers were at the closing table. The buyers were mad at him.
Oh, the worst co-part to me on the buy side was on a business that was 180 grand.
Wow.
Very small business, but literally had no idea. I think it might have been their very first one, but had no idea what they were doing. Didn't inform their buyers about anything, and they were, to say the least, not very happy after the purchase. Not for purchasing the business or anything, but just all the things that they did not know.
Yeah. Yeah, the other one was the guy's just a Yahoo. He's younger, he's closer to our age, but it was like having to pull teeth to get information from him. Please only direct your questions to me so I can go to the seller. Even though the seller was like, if you guys have any questions, feel free to email me.
Yeah.
Just CC him. And we can do it that way. That way it's quicker.
Yep.
And then when we started asking questions, the seller was like, well, wait a second. I didn't know I needed to provide this information or that, and due diligence.
Mm-hmm.
So then the broker's like, well, you need to go through me from this point forward.
Yeah.
Why? Why? We're in due diligence. Like, it should just be an open discussion.
Yeah.
It makes it easy.
For instance, this broker that I'm speaking of did not inform the buyers that there would be closing costs.
Oh, my God. I remember you told me about this guy. Yeah. Yeah. You split
And
it.
so we get to closing. They didn't necessarily have all the money to pay the closing costs. So we had to scramble for credit cards and things. They had to scramble for credit cards and things to get the closing costs paid for, to get the attorney paid for, so on and so forth. Had never mentioned that to them whatsoever. They thought it was just their down payment and that was it.
Listen, closing costs on almost every transaction are split between
Yes.
the parties, right? So it might be $5,000 to use a closing attorney to close the deal, right? You got to split that.
Yeah. Now,
Unless you negotiate it differently, but it's typically split.
Anything to do with the actual closing of the business is split 50-50. Now, a buyer's attorney's fees,
That's your thing.
that's the buyer.
Seller's
A seller's attorney's fees,
that's-
that's the seller. If the buyer hires a Q of E firm, no, there's no split in that. You're hiring or you're paying that.
Yeah.
But anything, your doc stamps, anything to do with
all
the closing
those
of
things
it,
are all split. You
that's
just
all split 50-50.
It's just common.
Yes.
It's just a common practice, and it's usually not that much. It's
And there's
depending,
usually
but it's usually
never
not
any
that bad.
pushback. I've never
Yeah, it's
gotten
usually not
pushback on that
bad.
whatsoever.
You could find some really good closing attorneys that aren't super expensive. There's some out there that are going to cost you a little bit more. But I mean, honestly, like most transactions, I've seen $1,200 to $5,000 for one side.
And most of the
so-
transactions I've been involved with, the buyer chooses the closing attorney.
Correct.
Which I always tell my sellers, as long as you have representation on your side,
cares?
that works out better for you.
Yeah.
Because you're not paying some of the fees that the buyer's going to have to pay
Correct.
because they've chosen the closing attorney.
Correct. And there are times where we choose a closing attorney.
Correct.
Right. And at that point,
Someone
it's just
wants
like,
a third
listen,
party.
And
that
I
doesn't
like
represent
third party.
either.
I
I do
like
too.
third party more just because he has no
Skin in the
malice
game
towards
one way.
one. There's no skin in the game. He's just neutral. He does not answer legal questions for
Nope.
either side.
Nope.
I handle the transaction. I review the documents. I make sure things get dispersed. That's all I do.
Yep.
You have questions regarding inside of what my area
Speak
of
to your attorney.
expertise is, you can ask me off of that.
Mm-hmm.
But if it's outside of what I have to do, that goes to your attorney.
Mm-hmm.
And then you split that. And that's usually where it's super cheap. It's like
It's easy.
I think it's like $2,000, $2,500 for most splits. I mean,
Yeah.
it depends on the area, it depends on the size, but even the bigger ones are. I mean, it's still a split, right? And now you get into millions upon millions of dollars. It's usually both.
And most of your
represented
third-party
attorneys
closing
are-
attorneys will base it upon the sale of
Size,
the size of the sale of the business.
So they're reasonable attorneys are attorneys.
Yeah.
I mean, there's some good ones, and there's some you're just like, you didn't need to spend the money for that person.
Yeah.
And listen, I would never say don't hire an attorney, but if you're selling a $300,000 business, sometimes you don't need an attorney.
Correct. Correct. And those no, but if you're getting to more complex sales, if your business is worth over $1 million, you want to have an attorney.
You have to have an attorney. Yeah. But 300,000, you might not need one.
The other time you want to make sure you have an attorney if you are selling your business and it's all seller financed.
100%.
You want an attorney.
You want an attorney. And I'm all for attorneys. I'm not saying don't hire
Correct.
an attorney. I'm all for it. Even at a $100,000 purchase.
We encourage everyone.
Hire an attorney.
Hire an attorney.
Spend the money.
Yes.
You're about to make $100,000. You could spend $3,000 to $5,000 just having this guy make sure everything looks okay.
Correct. Because
all it is.
we are not attorneys.
I'm not an
We are
attorney.
not CPAs.
I'm not giving you financial or legal advice, even though I do know a lot of it.
Correct.
I can't say it. Or I can say, yes, you can do that, but you have to confirm it with your CPA before you make any decision, because that is not legal or financial advice. Like I say, you can do this, but that's not legal or financial advice. So just confirm that. Go ask somebody that can say yes and has the certification behind saying yes.
Correct.
Don't ask me, and then because I'll say, yeah, I think you can do it. Call your CPA, call your accountant, call your attorney. Ask them the question, because it's very important that you cover your ass. CYA all the time.
Yep.
I CYA myself all the time. And there'll be times where they'll ask me a question and I dead ass know the answer, and I won't give it to you, and I'll just go, you have to call your attorney for that.
That's why we have our indemnification form.
And that's why there's indemnification for anybody that has a business, right? So we are not your financial advisors or your legal counsel. We are your brokers. We are going to get your business sold. Your team behind the scenes is going to do the rest of it for you.
Yep.
And that's the most important part, is having a team. Due diligence is important. Due diligence sucks. It's the biggest pain in the ass. You spent 20 years of your life running this business. You know the ins and outs of it, and you're going to get bombarded by things that you might not have known you were able to pull in a report. I've never pulled that report before. I didn't even know that report existed. Do you have it? Well, yeah, I could pull it. Then you should pull it.
Yep.
Right? And here's a great thing. If there's ever anything that's being asked of you in due diligence that you cannot provide because you don't do it, or you've never done it, so you don't think the report's going to look right, you can always ask, hey, is there something else I can provide to you that helps substantiate what you're asking for? I can't pull that, but can I give you this instead? What alternatives can I give you for this area that you're asking about?
Correct.
So that's always available to you. You can say, and you can say no. I wouldn't advise it.
No.
I would not advise it.
Raises questions.
But there are some things that people will ask that are due diligence items before they go into contract.
Yes, we do get
And that's part of
due
our job.
diligence questions
That's part of our
before
job.
we get to due diligence.
So part of our job is also to tell a buyer that's a due diligence
Yeah,
question.
that's for due
we are
diligence.
not answering that
Yeah,
right now.
that's for due diligence.
That's for due diligence. Like I had a guy say, I want his AR report. And I was like, that's a due diligence question. And I said, I can get that for you, but I'm going to redact everything. So I redacted the names. I gave it to him, but I was like, I redacted everything. So you can just see the numbers coming in over the AR. That's fine. Cool. But they'll ask for things like, I want employee payroll. I want insurance policies. I want this before they've ever even signed an LOI or contract and have gotten into due diligence. And I'll go, you can't have that.
I've had people be so bold as to say, I'd like to meet the employees.
Yeah, it's so crazy.
No.
Okay. And
And that won't even happen during due diligence either.
We'll talk about that in another segment as far as when do you tell employees.
Yeah.
Because
And
there's
it
10 different ways to do it.
correct. There's a lot, and it all depends on the very specific situation with your business.
100%. And your key employees. Like
Yes.
key employees are different
Yep.
than your standard employees. And there's a lot of
And how you
nuance.
introduce a new buyer
What's
to
right
the
way to do it?
employees
When do you do it?
can be
right?
done different ways as well.
When do you do it? Do you do it before you close? Do you do it after you close? Do you do it the day of closing? It's all industry based. It's all employee based, size of your company based. There's a lot of things that go into when you say it.
Correct. And
Yeah.
I have also had where I've sold businesses where it's worked out that they weren't told. It was just sold.
I've never done that.
I've had that.
I've
had that
never run
happen.
into that.
Neither the buyer nor the seller wanted the employees to really know that the business had been sold.
How'd that work out?
It worked out fine for majority of the time because the owner stayed for 2 years afterwards.
Oh, well, then that's
So
one thing.
it was
Yeah.
a very long transition, which
Okay.
I had advised the buyer or I advised the seller against, but he decided that he was good with the 2 years, and then about 8 to 9 months in, he wasn't so good with it.
Yeah, we'll get into some of those, the transition period talk. When do you tell your employees?
Closing in the transition would be the next step.
Yeah, closing and transition would be the next steps. And then also, I mean, there's a lot of things. How do you value the business? Where do you pull up your information for the values and things like that? Well, those are
By the way, the calculators that you find on the internet, yes,
suck.
they can give you a very wide range of what your business could possibly be worth. If you really want to know what it's worth, contact one of us.
Yeah, and AI doesn't always give you the right information.
No.
Because you have to teach AI what to say.
Correct, because AI is only going to pull what it says on the internet.
Yeah, whatever you give AI is what he's going to give you the answer for. If you're not putting in specifics about how the business is ran, who runs the business, how much the seller's involved. I mean, there's a list of things.
You still have
AI
to train that AI to know
what to look for.
Why would this be a 2.5 multiple versus a 3.1 multiple? Why would this be that?
Yeah,
you have to train it.
Why
on
you
that.
can't have a 6 multiple because your buddy next door had it, but you're trying to convince AI to tell you it's worth a 6 multiple. Like,
Correct.
No, it's not. It
No.
will never be. And sometimes AI will come back and go, "You're overshooting it."
Yes.
So AI can sometimes be. It's a blessing and a curse.
Yeah.
But yes. Contact a broker. Even if you do all those things and you get an assumption of value off of your own research or what AI is telling you, call a broker.
Correct. For instance, if you call us, it's not going to cost you a dime, and we can tell you whether you're right or you're wrong.
Yeah, or you don't have to tell us anything. We'll do an evaluation, and
Correct.
you can say, "Well, yeah, that aligns with what I thought," or "Oh wow, that's more," or "Oh wow, that's less," and then we'll tell you why.
Correct. And you
Right,
can understand why yours was so off.
Because it's not just what the internet's telling you, it's also what the buyer's market is telling me. The buyer's market's telling me that your businesses aren't catching the multiples like they used to, or the multiples are higher because it's a hot buy right now. So there's a lot of things that the computer and internet and your ChatGPT and your Claude, however you change their names or whatever you want to call them, they're not going to give you all the information you want.
No.
So very important. Where do you want to leave it off? Questions? Yeah.
Send us some questions. Send us some comments.
Yeah.
Let us know what you
What
want
do
to
you
hear
wanna
us talk about.
Yeah.
You know?
You want us to talk bullshit? We're not talk about selling businesses? Do you want to talk about the buy side? The buy side of things? Totally fine with that. Do you want to talk about industries? What industries do you guys want to talk about? What industries?
What's happening in certain industries right now? You know, is there consolidation going on?
Is the SBA changing anything? They didn't change anything this month.
No,
So,
not recently.
No, nothing's changed. August is supposed to be the next thing that I
Usually
saw.
July and August is
July
when
and
they start
August.
coming out
I
with
saw
more rules.
that the SBA is taking a look at something to implement in August, but I didn't see what it was. I can't remember though, so there's just a lot of crap. Or also market trends. It's not just what the SBA is looking at. What's the market doing? What is the buy side market looking like? What is the sell side market looking like? What industries are hot right now? What industries are not? You know what industry I saw is super hot right now? Nursing homes and RV parks,
Yes.
especially in Florida.
Yep. RV parks have been made very popular by YouTube, and nursing homes and things like that. That's just, the baby boomer generation continues to retire and they continue to get older. And you see these assisted living facilities and nursing homes popping up all over the place.
Yeah, it's crazy.
Yeah.
Super
And then,
big. Med spas.
there's certain industries that private equity is consolidating.
Yes. Yeah, there's a lot of them right now that are trying to turn the trades businesses to an all-in-one.
Yes. And they went through consolidations here over the last couple of years in things like water, pest control, lawn, because now I'm having buyers that are contacting me saying, oh, I want to look at lawn and pest, the exact same things that private equity has already rolled up.
Yeah.
And then they can't understand when I tell them, well, there's one pest control business on the MLS for the entire state of Florida.
Yeah.
Well, what do you mean? It's because there was already a huge consolidation that happened over the last couple of years.
There's a big consumption
And
of a lot of
anything that
these.
could be bought has basically already been bought.
Yeah, plumbing and HVAC got bought up huge.
HVAC
in the last 2
big
years,
time, yes.
in the last 2 years from private equity.
And
down here in Florida.
water had a lot of consolidation. Anything to do with water treatment, well drilling, things like that here in Florida.
IT services are big.
Yep.
Still.
Yep.
Still. There's a caveat to those we won't talk about right now, but there's a caveat to IT businesses because you have to have certain things in place to be able to get the value that you think you deserve versus what you actually deserve. It contracts basically, but there's something inside of IT businesses that a lot of sellers don't understand why they can't get a bigger ask. And I'm like, because of this. I'm not gonna say what it is until the next episode, but there's There's something going on in that. Steel welding, those are starting to get consolidated with private equity. You know,
Anything that's skilled.
yeah, and that's what we could do a whole episode on private equity, what they're looking at, what they're buying, what they're acquiring, what they're holding on to, you know, and so, you know, if you're an independent buyer, private buyer, if you're a family, and you're not quite PE, you can get a sense of what you should be looking at.
And that's something that's really expanded over the last couple of years, of family offices.
Family offices are great. Yeah, family offices are great. Those are good ones to deal with. Private equity is not bad. It's just
No, family offices are different, though.
You know what you're getting when you deal with private equity. But the one thing I will say about private equity is it's very black and white.
Yes.
They want X, they don't want Y. You know, they want to look here, they don't want to look there. And if they're looking at this, it has to check these boxes. If it doesn't check the box, we're not interested.
Yeah, and more than likely that's because they have a memorandum from someone who's larger than them, and they're trying to put something together to package for someone else.
The guy that gave them the most amount of money is saying, hey, if
Yeah.
it has this, don't buy it.
Correct.
Or these, don't buy it. So, but yeah, any questions? The critiques? I'm all for it. Fuck you if you have something to say bad about me. Just kidding. I don't care.
I wouldn't mind a little John.
I like it. I like talking shit. It's a lot of fun. My wife and I do it all the time. That's the best part about the relationship is, you know, we have fun with it, you know, so it's fun. Yeah. So give us some thoughts.
Yep.
Some critiques. What else? That's it?
Yeah, just tell us what you want to hear, what you want us to talk about.
Yeah, there's a lot that can be shared. I mean, we have...
Yeah, we have fun with this, but we do this for you all.
Yeah, we do it for you guys. Plus, I like talking.
Yeah.
My wife would be like, yeah, he does. He loves talking. My kids would be like, he doesn't shut up. So, all right. The ad backs.
The ad backs.
We're going with that, right?
We're sticking with the ad backs.
It's not on Spotify, so I'm pretty sure we'll be fine with the ad backs.
I think ad backs we're
ad
good
backs
with.
Is good.
So.
Until next time, next episode, do we want to just wing it next episode and just start it and go, we're talking about this, or do we want to announce next episode?
If you guys don't give us some ideas or
We'll figure it
things, we'll come up with something.
We'll figure it out. All right. Well, Jason Brooks,
Greg Bell.
we'll see you next time.